Hi, Deirdre Macnamara here from Letterkenny IT. In this video we're going to take a look at markups and discounts, really adding on and taking off percentages and making sure that we get all of those correct. So our objectives then are looking at markup. So this is based on cost, and you're maybe adding on a profit level, or you're adding on VAT, value added tax or sales tax. Discounts is based not on the cost but on the sales price, so it's a different base. This is based on cost and this is the sales price. So often you're maybe taking off a reduction on a sales price, you're giving a discount, or you're taking off VAT and making sure that you know that you're doing it correctly, and also maybe finding out the original prices. So markups are based on cost. Markup is a percentage that you add on to a cost base. An item may be marked up from its base price in order to include a profit margin, or possibly to reflect the value added tax or sales tax. Now, sometimes people have a way of doing this. So for example, if you wanted to mark something up by 10%, in your head you might have a little method of doing that. So a lot of people have the new price will be the old price plus 10% of the old price. So for example, if it was 100, you might think, well, 10% of 100 is 10. So I'll say 10 plus 100. Okay, that's kind of a method that a lot of people use in their heads. For doing sort of more complicated maths, this method here, method B, is probably better and is easier to work with later on. So the new price then will be 100% plus the markup percent. So that's 100% plus 10% multiplied by the old price. So you just multiply 110% by the old price. So as far as we're concerned from now on, I'm going to try and move everybody over to method B. They both end up with the same answer, and for doing simple things, it doesn't matter which method you use. But when things get a bit more complicated, it's better if you're using method B. Okay, so if the old price was $22.50, or your cost price was $22.50, and you had a markup of 8%, this is the old method A, and again you can just check that it's coming out correctly if you want, and we're going to focus mostly on method B. So again, 8% as a decimal is 0.08, 100% is 1. Okay, so just make sure you're getting those conversions from decimals, from percentages to decimals correctly. So it's 22.50 multiplied by 100% plus the markup percent. So that's 100%, which is the 1, plus the markup percent, which is the 8%, which is 0.08. Okay, so it's 22.50 on your calculator multiplied by 1.08, and you get 24.30. Okay, so just if you are somebody who is normally sticking with method A, that's normally, and you've done it for years in that method. So just to sort of make it easier to convert from one method to the other, this old price here plus the markup percent of the old price, that's 100%. It's all of the old price plus the markup percent of the old price. Or another way to say that is 100% of the old price plus the markup percent of the old price. And you can kind of see more clearly here when we move across to method B. It's 100% plus the markup percent. So it's 100 plus the markup percent of the old price. And that's how you can move across to method B. There are many different VAT rates or sales tax available. Currently in Ireland, 23% is the standard rate of VAT. There are some reduced rates, 13.5% for things like fuel, etc. And at the moment, for the next few months or so anyway, we've got a 9% tourism VAT rate in Ireland that applies to the hospitality industry. But these systems, doesn't matter what rate you're using, it'll work regardless. Okay, so here's an example here. Mr. and Mrs. McHugh buy a new television from their local wholesalers in Italy. The price on the label is €300. So they're in a wholesalers, and wholesalers don't always have to have the VAT displayed on the prices. But they know that they have to add on the VAT to this price at a rate of 21.5%. Okay, so they have to add on 21.5%. How much would Mr. and Mrs. McHugh have to pay for the television when you include the VAT? Okay, so the basic price is 300. The VAT for the television in Italy at this fictional point in time, is 21.5%. Okay, so method B, your full price is going to be 300 multiplied by 100% plus the VAT rate. Okay, 100% is 1, 21.5% is 0.215, so 1.215, 300 multiplied by 1.215 gives you 364.50. So that's the amount they'll have to pay, including the sales tax or the value added tax. Okay, hit pause in your video now and make sure that you're getting these correct. Okay, and I'll just click forward now to the answers. Okay, and you can see here are the answers. Just make sure that you are getting them out correctly. Okay, so you've worked out how to add on VAT or some sort of markup. It's useful to be able to determine the original price of a product before the markup was added on. To determine the original price of a product, we work backwards from the markup price using division. Okay, so for example, we want to determine the original price of a jumper now selling at 110, given a markup of 10% on the original price. Remember back to the earlier slide when we calculated the markup. In this case, we would have taken our original price or the old price and multiplied it by 110%. So we multiplied to get to this new price. So we're going to divide to get back to the original price. Okay. To find the original price, the new price divided by 1.10 or 110%, and it gets you back to 100. Okay. So the sales price before VAT or the original price is your sales price including VAT divided by